We are here. We are here. We are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos for entertainment purposes only. Thank you. Hey guys, we are marking up TKLF. Look at what's going on in the market. Price action. Only one candle in the market on the monthly time frame, which is a doji. So it's an indecisive market. So most likely, we can clearly see prices in there here at the bottom of that body of that candle. So price action highs, we're looking for price to tag You're looking for price to tag the top of this wick for the highest for this resistance, and we're looking for price to tag the lowest of this wick for area support. If we do have any breakouts, we'll probably identify in a lower time frame, but clearly right here, this is all we see. Headed down to the weekly time frame. Okay, monthly and the weekly, identifying the same pattern, the same candle, which is a doji. Headed down to the daily. Okay, so let's take a look at what's going on. Price action, second last candle is a doji, and price action is a hammer. So the way you want to think about it as market is basically at a high and just pushing down to a midpoint of overall structure. Okay, so we have our resistance for our high, we have our low, we place this SR line in the middle, we have our midpoint. So we can clearly see that price is coming to this midpoint here, or at the midpoint, not too sure. Headed down to the 4 hour. Okay, so we can clearly see that market, like I said, coming down to the area of resistance, working its way down. Did get a long wick down to that bottom, so market basically spiked down to the bottom, but wasn't able to hold. So market came back to this area and worked its way back down to this midpoint. And price action candle, we do have an engulfing pattern. So this looked like this clear market. This market made this drop. Why? Because we do have price action candles engulfing the second to last candle, but not just the body of the candle. It's overlapping the previous candle lower body, but also the wick. So it's very dominant because it's taking out the second to last body and the wick. But the only thing is the market didn't close out yet. We have to wait for the close out of the market to see if that market's going to push down or consolidate or push up. So far, that market is landing right at the area of support. May push down after the market closes. Headed down to the 3. So now on the 3 hour, we have some type of, the market basically going up to resistance, just bounced up and down, creating that area of consolidation. So now we get to see what's going on. We can't really identify too much because we don't really know what prices this candle is coming from or doing. So just think about it, the market's coming sideways and the market spike down, spike up, spike back down. So it's almost like some type of first leg, second leg, third leg, probably we on. Not too sure. We'll identify more as we look at a time frame. But we do know that price action, second to last candle, third to last candle, and fourth to last candle, that will be an area of resistance. So if we put a resistance line here, we'll be looking for some type of breakout to the top side or bottom side, or the market consolidate in that area if it goes back into the SR line, because I think it's below. Headed down to the 2 hour. Yeah, price is below the midpoint SR line. So let's read the market. Let's see what we see. So basically, like I said, you can't really identify what this market did with this candle. So just think about the market spiked down. So it broke, came back to retest, and it's pushing down again. So overall structure, if you remove the this blue line right here, just think about the market breaking. Either blue line, doesn't matter. Break, retest, and this is where we look for the pattern for the engulfing, which is the engulfing that can push that market down. If that market doesn't push down after we can clearly see it's breaking my midpoint, it could be having some type of issue in the area where the market could be consolidated, may push back up. But as we walk down the time frame, we'll see what has developed so far in the market. Headed down to 1 hour, and we can see that structure a lot clearer on the 1 hour. We do have that first leg coming down, like I said. Market came back up. So that's the break. So the red coming down and the bearish candles is the break. Green coming up is the retest. And then, like I said before, this is the area of the break and retest. We're looking for entry because it could be, we don't know how far this may consolidate. So we can put a big circle. So we did see that market break, came back to retest. So in that circle, we're looking for that pattern that's going to show that this market's going to shoot up or shoot down. Multiple directions of this structure can happen. Let's just draw out a few. We may have that first leg, second leg, third leg. Market may push up for that fourth. May get a retest here. Market may push up, or may just get a long first, second, third, push up to the top, or fourth leg, retest to the top. Market push up. If the market's working its way down to that downtrend market, as we can clearly see, we'll be looking for what? Think about that market's coming from that first leg, second leg, third leg. The market push down for that fourth. Okay, so that means market's coming from a double top. So that'll be markets in a downtrend. Okay, so and last but not least, we already know that we can receive market consolidation. Okay, this is why I put my resistance line here, because this line right here puts that market at consolidation, so you can see it bounce up and down if it bounces up and down into that area. But if it starts breaking this area, then I would think that the market's going to go up further. If it breaks down to the midpoint, we look for the break and retest to see if that market's going to push down. Headed down to the 45, identifying the same thing. We clearly set first, second, third. Market may push up for the fourth, or may push down, so maybe a W or M. Price action candle is a doji. Indecisive market, so that's area consolidation. So you can see why I put my resistance line here. We can see market price is just riding into that area consolidation, and we have to wait for the breakout. So market came down, broke out a little bit, came back to return, still within that consolidation with price 15 on a 15-minute same extended candles. Markets consolidating side-by-side candles with on a 15-minute candle. Side by side with the 5-minute. Price action with the 5 is a very small candle, very small bullish candle, showing no dominance in the market. So huge consolidation. So the time frames that we're walking on the last 4 or 5 has been maybe 6 has been in consolidation and headed down to 1. And now we can see that market is kind of like, it's not kind of, the market is coming to a area, some resistance at the top. If we get this price action candle to be an engulfing of this second last candle, this price can drop, but if not, then we have to see what's going on. So if you range this off, you arrange it from that doji, second last candle doji, to the high and low. And then once you start seeing a breakout of this area, you're looking for the break and retest to this top side, you wait for the break and retest to the downside, or you continue to see that market consolidate in that area. Very important information, guys. Please review Forex Pattern Cheat Sheet. Click on images. So let's see what structure we have. We have a bearish inverted head and shoulders. So it's a bearish inverted head and shoulders. Basically, market's at a high, working its way down to a low, came down to a low, pushed right back to a high. At the high, market probably came from a trend. Okay, once it got to this low, how many spike down to low did we receive? 1, 2, 3. Okay, triple bottom. Okay, head and shoulders, head, left shoulder, right shoulder. Same type of strategies, market. Head and shoulder pattern, triple bottom. Same thing. Inverted. Okay, and then market came down to a low after the spike, market pushed up. So with my stuff, you can also do the structure of the what? First leg, second leg, third leg, fourth leg, retest, market pushed up once. How many more retests do we have left? Very important information, guys. Breakout retest strategy: when the market is at a low and is working its way up, we wait for that market to break, like we did today. Wait for that market to receive that engulfing pattern. It's going to push that market up. Okay, guys.